Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Wednesday, March 27th, 2024, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by Viper XL007. He is back from his hiatus. The guy takes more vacations than any other co-host I've ever had. But he's back this week, and we are going to just kind of chat about things in general on the markets. No specific trading styles, no specific agenda. In fact, I don't even really know the content that we're going to dive into wholly on this show. So ad hoc as we go. But before we get to that, I want to give a shout out to our Discord, link in the description below. You can click on that, join our Discord, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading. Love to hear what type of content you're interested to hear about. You can also find a link to thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcasts. And if you can't find it there, let us know and we will get it there. But let's hop to this week's content. Viper, it's been a while since you've been around, and I have been boring all 6 of our viewers with my premium selling trades. And I know that you've been experimenting with various trading styles and things like that. And I think you've been trying to dial in and a little bit of retrospection back on where you've come from. We're really kind of up at new all-time highs in the market. And we had come from lows and pits, and we've been doing this now for a while. And so I guess, what have you been up to in your vacation, who, always cruising the leisure side of the country? And then also, where are you when it comes to reflections back from where you've learned and stuff like that?
Yeah. So along those lines, I think we mentioned the first official Blockhead Traders Summit Bourbon Pour back in December that we had. So there was yet another Blockhead Traders sanctioned bourbon pour over this time period while I was gone. One of the members that was unable to make it in December, met up with him, and we had a good time with that. So that has nothing to do with trading, but that was a fun bit.
Nice. So is that one of the beverages from that meetup?
This is actually from the original. So this was a gift from the original meetup, a little Knob Creek old fashioned here. Just to, like you said, kind of settle into discussing and kind of what I wanted to talk about was, there's the popular song and phrase, started from the bottom, now we here. But I feel like for us, it's more like we started at the previous top and now we're back. And, that's
circle.
What you get when you buy in on the top and then you ride all the way down through a bear. And now we're back up at new all-time highs. So I was reflecting on that with the successes that I've had. Obviously, the plentiful amount of failures that I've had in the journey, going from the top to the bottom and back to the top. And I was reflecting on a few things. I was reflecting on the psychology of it all, because we frequently talk about that on the show way back. I don't know exactly when. I mean, show historians out there could dig it up, but I feel like we had an episode talking about psychology of markets, psychology of trading, and all that kind of stuff.
I'll save everybody the trouble, and I'll put a link
there we go,
right above us.
Right there, over there. And so I should have gone back and looked for that, and I'll click on that link when this goes live and see how much has changed in what I feel now. So there's a couple things. One thing which you might remember, because this goes way back to before we started the show, and as we were starting the show, the concept of what we were trying to accomplish here, which obviously is learning in the open, which is just demystifying markets and accessibility to them. and the different mechanics of them and all of our hard hat wearing and things like that. And way back then, you mentioned how, one of your goals is to just take full control over a significant portion of your wealth, whether it's retirement, whether it's existing, and ideally maybe get to a full-time status or something along those lines. And certainly back then that held pretty much zero interest to me, and it was an interesting thought experiment to think back to that time where I was like, that's not that's not what I'm interested in at all. And I wouldn't say I'm still there yet on being super interested, but I can see, having just gone through this cycle, it's at least becoming more interesting as far as the control that it's given me, the confidence that it's given me in the management of my financial wealth, or control of these investments and things like that, which has been cool. And just kind of wanted to touch on some of that as far as the thoughts that how they've changed over the time for me personally. A few of those and I really want to hone on some of these aspects, because these are things we talk about all the time. I feel like one of the key secret sauce reasons why I feel like I've had a very healthy growth trajectory in this path of confidence is everything we talk about. I mean, here's more homework for you. Link the other video of what you should do before you start trading, or whatever that beginner's guide was.
Ooh, oldie but a goodie. That's almost one of the OGs.
Because there were parts of that I really want to focus on, which was when you get into the market, no matter when you get in, no matter how you get in, no matter if you go equities or you want to throw the hard hat on and go more into the crypto realm or things like that. What I think has been super key to my particular growth path has been risk mitigation, risk tolerance, never playing with more than I can afford to lose, and all that kind of stuff. And I feel like that was so important because I can see now I'll approach a play, whether it's a crypto play, whether it's an equities play, whether it's an options play, and the size of the play, way back in the beginning, even if I was, betting X amount of dollars, and even if that was only 2 to 5% of the money that I had available, it still was this weird, anxiety of letting this money go. And I feel like some of that comes from not doing this. I mean, when we have the mindset of savings and all that kind of stuff, you letting go, and you're not letting go, but just putting this money to work in other ways is really stressful. And so I was super cautious. I mean, and everybody should be when you get started, have that risk mitigation, have that risk tolerance, to not just jump in and be like, we're going to do this, and then throw a bunch of money down on the table, even if it's a small percent of what you have available. I feel like there was an element of respecting the money that is very important to having the growth. I mean, at least it was for me. Everybody's journey is going to be different, but I've really been reflecting on the importance of that, because I can see now and I mean, it certainly helped that I was coming in with that attitude, because I was coming into the start of a bear, into a bear, whether it was equities, whether it was crypto, it was down, 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 down. And so luckily did not come in with a whole bunch of money only to see it all evaporate. And that certainly helped. But psychologically, I think it helped as well, to where now getting to know the underlying mechanic. We talk about that all the time, whether it's options or whatever investment vehicle you're using, knowing what's behind it, knowing where the yield is coming from, so to speak, knowing where the potential for profit is coming from, or the loss is going, is a huge part of it too. And so I feel like all that's kind of in reflection kind of come together much more for me to have the confidence to see opportunities and now just be able to jump on them, whether, across the board, seeing an opportunity, having two and a half. What is it? Maybe 3 years at this point of education and open-minded learning to have soaked in all of these mechanics, to be able to see an opportunity, immediately know whether I'm interested or not, whether I have that confidence of knowledge or if I need to do more learning on it, because I don't want to give the impression that, okay, I've learned everything, I'm good to go now. Like that's not the case at all. But there are checkpoints along the way, and I feel like I'm kind of at that one of those checkpoints of confidence to see an opportunity, jumping on it, and even though I still only risk a small portion, so the risk mitigation stuff is still very much alive and well. There certainly is no more of that detachment anxiety that there used to be, and that leads to the confidence. And then that confidence also leads to when it's a loser, when it's just a kaput and I lost it, then it's like, oh well, that's the whole risk mitigation thing. We look for another one, we move on and try to have a strategy that's repeatable and has that positive edge in our favor on the probability scale. So it's been an interesting reflection, I think. An important one. And so just kind of wanted to go over that a little bit and see, how about you've certainly ridden the same wave in very different ways. And I'm curious if you've seen anything similar or different, or if you just feel like you're always learning, but have a different experience through the top to the bottom to the top.
Actually, I kind of remember when I asked you, hey, I want to do this show. And I only reached out to you because I was like, I really want to do this show, but I feel really weird staring at my camera and myself and talking to myself. And I was like, it's a little more natural if somebody's on the other end. And you're like, well, what do I have to do? I'm like, you just got to be on the other end and listen, and I'll just explain to you. You go, so I don't really have to do anything other than, just listen. And I'm like, yeah, pretty much. And you can tell me what you don't get. And now I'm pretty much, you go away for a couple weeks or whatever. I record solo episodes, and it's normal now that I talk to myself. I don't know if that's a good thing or a bad thing, but I think it's kind of funny where it all started, where it's just like, yeah, I want to do this, but I just need someone else on the other end of the camera. So it's kind of funny that you're like, yeah, I didn't really want to learn anything, and I thought you were a little bit crazy, and you still might think I'm crazy, but at least there's a little bit of appreciation for some of those original goals, which I think is just kind of funny and ironic, I guess. You also kind of mentioned when you got started your hesitancy or panic or anxiety around, oh my gosh, what happened? Where did that money just go when you bought an equity in your case or what have you? Tie up your money in some sort of trade. I too had similar things. I was a little more gung ho about it. Like, yep, I want to go swimming, and you know what? There's the deep end. You know what? Forget that little 1 meter board. I'm going up to the 3 meter high dive, and I'm just going to bounce on that thing, and I'm going. So I'll say I was a little more bold, I guess, when I just marched in. It's kind of like when you dip your toe in the water and it's really cold, and you're like, oh my gosh, this is gonna be cold. But rather than just try to wade in, like, like you might try, and you're just like jumping straight off, like you shock your system. And that's really how I feel I kind of started. But I can sympathize and understand or empathize, not sympathize, empathize with your anxiety, because I remember my very first trade. We talked about it on the show at some point. We even tried to do a anniversary trade on it, which didn't work. I lost money on the anniversary trade, but it was a Kohl's trade, and I remember it was like selling like $19 in puts or something like that. Like tiny money, and I think I won like $5 or something like that. I'm like, oh my gosh, like it worked. I can't believe this. And then I remember for the first like several months when I would put trades on, And I mean, these were tiny trades. So keeping in line with the position sizing, risk mitigation, everything you mentioned, like I had done a lot of homework before I started. And that was the big feedback from everybody is they're like, hey, you really get burned out. You can really mess with your brain if you don't pay attention to this stuff and control your exposure on these trades, because it's still the market and there's no way to predict the future. So you're going to lose some things. And so it's all about controlling your losers. So, but I remember just getting super excited when I'd be like, oh my gosh, I put a trade on today. And, in a week later, the end of the week, I closed it out and I had $50. Like, wow, $50. That's huge. Like I didn't do anything and I have $50. And it's just kind of funny to look back at that because, not that you should risk more, right? But my portfolio has grown. And I don't think there is any trade that I would even entertain today where the potential payoff would be $50. Like it's just not in my portfolio position sizing, risk mitigation. Like I'm still trading the same percentages, the same risks, but remember I started with $2,500 is how big my portfolio was when I started. So, yeah, I guess the journey to that and now how comfortable it is for me to put trades on that are considerably larger dollar amount wise than when I started. I mean, not percentage wise. I still adhere to that percentage basis of your portfolio. But I think it really just speaks to the power of practice and familiarity and just being comfortable with something. My kids try different things and they're always like, oh my gosh, I'm terrible at this or I'm terrible at that. And I'm like, yeah, well, the only way you get better is to practice. And I think that's the same with trading and investing or, whatever your time horizon is the more you get exposure to it, the more you go through it, it just makes you more comfortable with it. I am comfortable talking to myself in the camera. I am comfortable putting these trades on. I am comfortable when the position goes against me. And was I at the beginning? No, 100% not. I had a lot of anxiety over it. I got positions that were too big, and that's where I really learned, oh my gosh, then you don't even sleep. So yeah, I think it's similar to you, where I kind of worry, what do I do on this show at some point, because I started it to learn as we go, and I worry that I will somehow become too far from the I'm just starting to the way that I communicate or what I talk about here, that it will seem very unattainable to somebody who is just starting. And I don't want to get in that position. And I think that's really hard to try to remember that perspective of, of our 6 viewers, 5 of them might be brand new. And I don't want it to sound like, oh my gosh, I can never attain that. You can. There was nothing like I had a full-time job. I still have a full-time job. This was just kind of a hobby and a lot of extra, not tons of time, but just devote little bits to learn. And
yeah, for sure. And I definitely kind of along those lines, because I have the same feelings as far as somebody brand new watching this. It sounds like, oh, yep, here we go again. Like I've seen 100 of these videos on YouTube of just, people calling out, they clearly know what they're doing and they're making money. And so I can't do that. I don't know anything. And I'm equally very sensitive to that mindset because I get it. And the two things that I want to portray above most of all is, just because we're reflecting on how far we've grown and whatnot, certainly for me, and I'm pretty sure none for you either, none of that has come from some massive inflow of hit this huge, just hit this big winner or this sort of thing. Like, it's not that it was something that was purchased or inherited or anything like that. It's the confidence through knowledge, and knowledge being the supreme equalizer that we try to profess on how accessible the market is. I know when we first started, it was very much like, it still is. And it still is to a lot of people, our peers, people older than us, people younger than us that have never touched the market. They're like, I don't know. I don't like studying papers and business fundamentals and reports and earnings, and like you get it in your head of like I have to do all this research and da da da, and that is a particular style, and we don't do a lot of that investment mindset style. That is very much a real thing. So if that sort of thing excites you, like you just dig into that. But if you think the market is only that, I think our particular unique journey has proven that's not the case. I mean, we're not. I've done zero research on pretty much anything I've traded in this time frame, and just gone to the trader mentality, gone to the charts, and gone to just learning that over and over and over again. So certainly along the lines of what you're saying, one thing I worry and certainly don't want to portray is that we're somehow different or somehow not, didn't just come in scared and worried and anxious about everything. And then the other thing that I don't want to portray is that you just listen to all of our experiences and then go, okay, cool. I'm going to take note of all those things so I don't do it. And then I jump in and we're good to go. Because that's absolutely not going to be the case. I don't want the lessons learned and the confidence to portray a false sense of security going into choppy waters. And so it's this like yin and yang of like trying to balance the tug and pull of this of you're absolutely gonna fall flat on your face. I'm still gonna fall flat on my face going forward. I can't wait for next week, next month, next year, whatever, when Sprocket or I have this massive loser and it just blows up, or it's going to happen. It's going to keep happening. And when you get in, it's going to happen. And that's, again, risk tolerance, the risk mitigation. You can minimize all of these things so that they explode in a container instead of through the entire house. And so that's the other big thing that I want to impress from our experience is there's being afraid of it and then there's being accepting of it. And it's the latter that I think is most important of respect the fear, because that's what's going to keep you honest to your position sizing. And that's what's going to always keep you honest to your risk mitigation. So always respect the fear, but never let the fear stop you, and still touch the water. You still have to jump in. You can only learn so much. You have to touch the market. If it's something you think you want to do, you just have to get in and start doing it before you really start to frame and mold and shape your experience. But you can do it responsibly. And I guess that's the biggest takeaway in my reflections is doing it responsibly leads to a very enjoyable journey. Like it's there. I mean, there were a couple times where I did get in over my head. There were a couple times I put the cart before the horse. And like you said, where it was late nights of like, I shouldn't have done that. And now I'm so deep underwater, but I can't panic and just bail because, and those were learning. Those were very important learning moments of like, I got out ahead of my skis, really screwed this up. Instead of panic, it needs to ride out. It needs to do what it needs to do. I understand the mechanic here, and I'm going to take a really strong note of let's not do that again. Let's stick to the rules, because you stick to the rules, you're still going to have failures, but it's all in that contained vessel to ensure a much more productive journey.
Yeah. I think one aspect that I don't know how much we actually touch on it, but I think it's something that I've grown to learn and appreciate more, and that's patience. I think, we talk a lot about, oh, this is the trade, this is the move we're looking for, and maybe it doesn't apply so much to some of the price action that you and some of the other traders do, where you have very defined bang, bang, bing, bang, boom type of things. But in my trading style of selling premium, my bailout points are can be pretty deep in the money. Like just by the nature of the way that I design them, I can have pretty big drawdowns. And what I have learned over the years is to stick to your plan and be patient with it. In the area of premium selling, I have the concept of rolling trades. And if we're not hitting my bailout target or we're not hitting profit target, it's hang in there, stick with it, keep rolling it. It's going to come back. You're going to be able to get out of it. I touched on it a little bit while you were out, Viper, kind of a trade that I had on Dollar General. And, I'm just waiting now to be called away. But this is an earnings trade that I put on. I think it originally was around a 145 strike. It breached. We went underwater. I mean, for a while there, Dollar General was trading under $100. I'm $45 in the hole on this thing. And it was be patient, collect the dividend. As you start to rise, sell calls, and just keep working those shares that you got assigned. And now I've collected, I don't remember the number, but it was close to $18 in premium. So $1,800 on this trade. And we are well above my strikes, and I have calls out there. So, any of these days now I could be called away, and that's awesome because that means I got all of my money back plus all the premium that I've collected. And it was just be patient. And now if I had panicked when we were down at, $100 or $110 and sold out, I'd have locked in those losses. They would have been real. And okay, maybe I could have battled them back a different way, but I stuck to my plan because my plan was, look, this is a company that if I get assigned, that's okay. I'm going to go into the wheel. I'm going to try not to get assigned by rolling the puts, but if it happens, it happens. And once I get assigned, I'm going to hold these things, collect dividends, sell calls till I get myself out. And that's really hard to do. It's real easy to talk about. It's real easy to be like, oh yeah, of course, that's what I'm going to do. But when you open up your portfolio and you're like, oh, look at that, I'm $4,000 in the hole today. And then the next day, oh, I'm $3,900 in the hole today. Oh, $4,100. It's not fun, but the more that you've kind of hung on and seen how it works out in the end, then the more when you have these drawdowns that I'm inclined to say, okay, just be patient, stick with it, and roll with it. And it's just a calming, like you're just good with it.
And I think the the important thing in that scenario to call out is there was a predefined exit scenario for you. There was a bailout situation defined. Whether somebody's getting into options, whether they're just spot trading, day trading, in a position, there is a predefined, this is when it's over, and I need to get out. And that's really important to have because I've certainly got caught up on the other side where I don't have that clearly defined strategy of exit. And then it just messes with you because it's, even if you have, like you just said, even if you have the clearly defined exit, it's still going to be emotional and it's still going to mess with you. And so you can at least cling on to, once upon a time, these emotions weren't here, and I said this was the thing when I bail. So I'm just going to lean into that and say, maybe I knew what I was talking about. Maybe I didn't. But the only way I'm going to find out is if I just stick to it and let's just keep rolling and riding with it. If you go into it without that plan, those emotions are still going to creep up, and now you're going to capitulate, and now you're going to potentially actually harm yourself, your money, your financial situation, because you didn't think about it. You didn't accept the situation end to end. And so now you're potentially going to take a loss that you might not have had to take. So, and it's interesting because I feel like I've learned a similar lesson on patience in a completely different metric or a completely different mechanic of just day trading, just trading a chart. And what I mean by that is maybe it's too abstract to have the parallel between the premium selling mechanics and just trading. But I feel like a situation that just recently I've really started to finally control myself on is if I'm in the middle of a trade, just day trading, spot trading, whatever, and all of a sudden something happens, some binary news event happens, and all of a sudden there's panic in the market and something starts dumping. It's a similar panic on what you were talking about, in that I've already predefined a stop loss or a situation when the chart has fundamentally shown signs of reversal of the trend. And so it's only been recently. So I want to stress that after 3 years, only recently, that when there's that giant, steep, sharp, high velocity candle down, that I've finally come to have the patience to step back. Don't push the button. Don't panic on it as I would have previously. I would have been right with everybody that panic sold that candle without a plan. It would have shown up, and then I would have sold it, been like, oh, good, I'm out. Oh, wait, what's it doing? And guess what? I sold the bottom. And I'm not saying that's always the case, but it's just one of those mentalities of when there's panic, when this thing happens, there's still a greater thesis at play. And in the particular case of trading, that greater thesis is we are trending in a particular direction. And so therefore there is a clearly defined when that trend is broken or at risk of being broken. And anything that emotionally looks like it's reversing, like, no, it's not. It's not until it hits this particular criteria. That's the confidence that I think kind of parallels to what you were talking about, as far as have the patience to just walk away, have the stop loss where you defined it of being important, and just put it down and just go touch grass, as they say.
Yeah. And I think both of our examples are more patience once you're in it. Don't panic on the way out. Be patient to stick to the plan. But I think the other part is true, and that's patience on the entry. So I know there was a period of time where I said, oh my gosh, I have to have as many trades in the market at all times as possible. And so I would, scrape and scrounge and look for anything and say, I'm going to play this. I'm going to play this. I'm going to play this. And that was cool because it did statistically validate some of my thinking. But I also found that I could even tilt the probability a little bit more in my favor if I really would hold out for the real setups that I like, the uber extended volatility, and just have the patience for that, and knowing, hey, every day is not one of those days to play that, and to sit and wait for that thing to arrive, or pick the thing that's building volatility and wait and wait and wait, and then strike when it hits your criteria. So patience when you're in, and patience before you get in.
Yeah, absolutely. And there's been a very similar a very similar thing in my trading world of exactly what you just said, where it's going to be a little abstract, but part of that's intentional, because I don't want this to be a trading chart reading lesson right now. But I've kind of talked about it before on the show that, again, only recently, after 3 years of pretty intensive studying and learning on how to read charts, and in community with those also learning, there was a particular way that a chart would that price action would unfold, and I would see this gain, test, whatever, and then I would jump in there. And it's only been recently that it's finally clicked of like, okay, that's technically valid, but it's really late. And so this is, again, sort of what you were saying as far as patience on the entry, and it's a little bit more confidence on the entry, to when there's still panic on the chart. There is a very clear now, and I don't want to make it sound like it's always clear, like you should just see it, dummy, just do it. It's a very
it's black and white.
Once you see it, and then you start to see it over and over again. And if anybody's interested, like, we could certainly get into this much more officially and not so vaguely, where of course it sounds right because we're being so vague. But there's a moment where it's still panic on the chart, but there's just a little thing in the price action that's like, nope, that was the sign. And most people miss it. And most people miss it because there's still all of this panic. This tiny little thing happens, and it appears in the same exact way. So again, that kind of speaks to the methodology and the repeatable nature of a strategy and how important that is. You get in there, and then by the time the price gets to where I previously would have been making the entry, that's actually profit target number one. And it feels so much better to be taking a profit target when previously you normally would have been getting into the position. And so that's along those same exact lines of the patience, the confidence on that entry. And nobody should just walk in thinking, I'm just going to get this. It's, again, 3 years. I'm not saying it'll take you 3 years. Maybe it'll take you one. Maybe it'll take you a month. Maybe it'll take you 5 years. Everybody's journey is different. But the point is, the only way to do it is just to be in it and be touching it and be experiencing it.
Yeah, Viper, I don't know how this statement will strike you. It's one that I hear periodically. I don't even remember where it originally came from. I'm sure somebody in some trader or some investor somewhere said it, but they kind of, the saying that goes that capital markets are the most powerful tool in wealth building available to people today. And I know that sounds a little, I don't know, I can picture an individual that you and I both know that probably was throw things at us and say that's such a crooked statement, and capitalism, whatever, is probably the evil and all of this stuff. But I guess I don't view it that way. I view it as, if I look at the world and I look at society in general of things, and the wealth that can be built through capital markets, whether or not you agree with the mechanics behind the capital markets or not, it's still a thing that exists. And I feel like we've talked about this forever ago when I started this. Is I really feel that one of the biggest differentiators of people and their I don't know, ability to build wealth, generational wealth, is an educational thing of being exposed to capital markets in some way, shape, or form. Doesn't mean trading. I mean, it could be investing certain things. It could be any number of things. It could be bonds. It doesn't have to be equities. But I don't know how you feel about that statement of, that the capital markets are the most powerful tool for wealth building.
Yeah.
But have you ever heard that, or how does that strike you?
It strikes me similarly. I mean, I get the concerns, the ideological criticisms, and all that sort of stuff, and I certainly am not discrediting any of that. To me, it's more of, all right, if we take a step back, the idea of it is the underpinning of a entire economy, and so there are certainly plenty of ways to improve it. There's certainly plenty of ways to do all the ideological tweaks and molding and changing. But at the end of the day, there's still a very large picture. This is what is running an entire economy. And so therefore, okay, maybe I'm die hard, like I'm going to change this. I'm going to, take up that cross of like, that's the thing I'm going to focus on is changing it. Like, doesn't change the fact that it's still how it is today, and there might be some opportunity to utilize that, like you said, as this generational wealth tool builder. And when we say generational wealth, like, we're not talking about GameStop short squeeze, or we're not talking about like, I got generational wealth in a week, here we go. Like, no, it's literally generational. And I mean, it's interesting that you bring that up, because I was just watching some videos yesterday about the very, very, very the people you don't recognize, the people you don't know that have become millionaires through opportunities like this. And again, not in a sensational way. There was a story now, unfortunately, I don't remember the individual's name, but there was this guy that was a janitor his whole life, very modest income, lived below his means, all that stuff. just simply invested. And again, I don't remember exactly what, but the focus of his investment was that it was nothing crazy. It was $200 or $300 a month into a yielding dividend asset, and then compounding that in. The power of compounding interest is such a mathematical wonder. Not really a wonder. It's very clear how it has its effect. But still, the power of it. And when he passed away, this guy who lived his life as in the most ordinary way had passed on $22 million. And I don't even know that it was to family. I think it was he had it earmarked to go to a particular school or a grant fund or something like that. But the point is, you don't hear about that. You hear about the guy that made $22 million last month, and then you want to be that guy. But that's not the case. That's not the power of this particular vehicle, just the market in general. It's how you can utilize the power of compounding interest. And like you said, whether it's bonds, whether it's just index ETFs that pay dividends or things like that are much more quote unquote boring, but they allow you to capture this tool to, like you said, build wealth. And if you can have the discipline to stick to it, stick to a plan, live below your means, all that sort of stuff, it's truly generational. And there's certainly a power in that. So I would certainly agree.
Yep, 100%. And I think that brings us to the end of this week's episode of Welcome Back, Viper, and a little bit of a reflection and the journey thus far, which I'm going to have to go do some math. I should have done it while we were on the recording so I could sum it up here on how long we've been recording this. I feel we could do the math because this is episode 159, and I don't believe we've ever missed a week. So, yeah, that's pretty much about 3 years of episode recording. And I know that I dabbled in trading a good bit before the recording to get to the point of where I said, yep, it's time to record this. So, yeah, that's just a little bit of reflection on Viper and I's journey here and kind of similar growth. I mean, I guess you can say that makes sense because we chatted every week about it. So it's no wonder we sort of went together, although this crazy guy spends a little bit more time in crypto than me, but I'm still also in the crypto space. So hopefully that you found this video interesting. If you didn't, let us know and tell us what you want to hear about, and we'll focus in on that. If you did, I guess you could also let us know, and we can also make more content like that.
Hop in that Discord and start your journey, and we'll certainly be walking along.
Yep, definitely. There's lots of chat that goes on in the Discord. Sometimes it can be intimidating because you think it's always the same set of people, but we very much value new perspectives and voices in there. I think we got a bunch of lurkers that maybe observe the few conversations, but we'd love to hear from you. So join us in there. Otherwise, good luck out there in the markets. Good luck finding the thing that excites you when it comes to investing or trading, whatever it is in the capital markets. And I hope you enjoy it and have fun. And remember, think outside the block.
Do your taxes.